More than 4 years after Evergrande blew up, China's property market is still not properly recovered. And this is the real story. Because this was never just about one bad developer. It was the start of a spiral. Debt, falling prices, broken confidence, unfinished homes, weaker consumers, weaker local governments. And now the question is bigger than Evergrande. How damaged is China's property market really? Does China even care about investor confidence anymore? And what happens to an economy when one of its biggest engines stops working? A lot of people talk about Evergrande like it was the entire crisis, and it wasn't. It was very much the symbol though, the warning shot. The moment everyone realised the old model was breaking, Evergrande formally defaulted in December 2021, and what came after that was not a clean collapse. It was worse. It was a slow bleed. Because once buyers stopped trusting developers, the whole pre-sale model started to look dangerous. People were paying in advance for homes that were not finished. Then projects stalled, then buyers panicked, then confidence cracked, and in a property-driven system, confidence is absolutely everything. And this is the part that really hurt. China's property crisis was not just a market story. It became a trust story, a delivery story, a social stability story. People were not just losing money on paper, they were paying mortgages on homes that did not exist yet in usable form. That is toxic. That is how you destroy belief in a system. Beijing knows this, which is why it built the project whitelist financing system and pushed banks to help complete stalled developments. This scale shows you how serious it got. China's housing ministry said more than 1.65 million pre-sold units had been delivered under the rescue program by August 2023. And by late 2025, officials were saying over 7.5 million previously undelivered pre-sold homes have been handed over. That is not just a normal cleanup job, that is a massive repair operation. And if you want the current picture, it's pretty simple. The market is still weak. In January to March 2026, China's real estate development investment fell by 11.2% year on year, according to the National Bureau of Statistics. New housing starts fell 20.3%, funds flowing into developers fell 17.3%, and that is not recovery, that is ongoing contraction. In Reuters' March 2026 poll also found analysts expect home prices to fall another 4% in 2026 and then stay basically flat in 2027. So yes, the panic phase was not what it was in 2021 and 2022, but the market still looks structurally sick, not fully healed. Investor confidence has taken a huge hit, but not just offshore investors, home buyers too, and that really matters more, because in China, the most important investor in property is often the household, the family putting savings into an apartment, the middle class buyer treating housing like wealth storage, and the person assuming property only goes one way, up. That belief has been damaged badly. Reuters noted weak sales and falling prices have weighed on consumer confidence, and officials themselves have admitted that they need to stabilise the market. Why? Because when people no longer trust developers to finish homes, they stop buying. When prices keep falling, they wait. When household wealth gets hit, they spend less. And that weakness spreads everywhere else. And this is where people get confused. Does China even care about investor confidence? Yes. But selectively. China cares about confidence when it affects social stability, home buyer trust, banking stress, economic growth, and local government finances. What China does not care about in the same way America does is maximising returns for every property developer shareholder or every offshore bondholder. That is the difference. Beijing wants system confidence, not necessarily market freedom. It wants people to believe the state can contain that damage. It wants projects finished, banks stable, buyers calmer, and growth intact. So yes, China absolutely cares about confidence, it just cares about political and social confidence more than pure investor sentiment. This is the really important part. Property was once a huge growth engine in China. Now it's a drag. The IMF said in February 2026 that the prolonged property adjustment was spilling into local government financing, weakening domestic demand and adding to deflationary pressure. And that makes sense. Less construction means weaker demand for steel, cement, glass and land. Falling home values hit household wealth, and when household wealth gets hit, people spend less. That hurts consumption. Then there is local government. For years, local authorities relied heavily on land sales. When the property machine slows down, that revenue model gets weaker too. So this is not just about developers losing money, it's about one of China's old economic engines no longer carrying the weight it once used to. So, more than 4 years after Evergrande defaulted, where is China's property market? Still damaged, still heavy, still fragile, still dragging on confidence. Investor confidence has been hit hard. China does care about that, but mainly because confidence feeds stability, spending and growth. Not because Beijing worships the market, and that is the real takeaway. Evergrande was not just one company failing, it was the moment China's property model stopped looking unstoppable, and the economy is still living with that.